Welcome to the Deep Dive. We're here to help you cut through the noise in today's financial markets. It's September 9th, 2025, and honestly, the market's throwing us some curveballs.
It really is.
Yeah.
Lots of conflicting signals.
Exactly. So our mission today is to decode this puzzle. Why are things pulling in different directions? And more importantly, what does it actually mean for you? We're digging into insights from, top-tier systems, Apex Protocol for predictions, Alpha Tor tracking the big money flows, Dotas for those sharp trade triggers. We want to give you the real story behind what we're calling a fragile bullish bias. The market kind of wants to go up, but it seems, well, nervous.
It's a tricky setup where being precise is everything.
And that's exactly why we do this, right? For you, the listener, because when you're swimming in data, understanding these subtle dynamics, especially the contradictions, that's where the real edge is.
Yeah, it cuts down the overload.
Totally. It helps you find those aha moments. We're not just throwing numbers at you. We're trying to connect the dots, explain the why behind the what. What should you really be watching? Okay, let's dive in. The big picture first. What's the overall vibe in the market today? What's this landscape telling us?
Well, the main theme is this transitional risk-on regime. But, and this is the key word, it feels really fragile.
Okay, risk on, meaning people are leaning towards growth, higher risk stuff.
Precisely.
What?
Stocks, tech, that sort of thing. But fragile is crucial here. It's not a strong, confident bull run. Think of it like, I don't know, walking on thin ice, maybe look okay on top, but it feels delicate.
Right.
Prone to cracking fast.
Right.
You see the VIX, the volatility index, people call it, the fear gauge. It's low, down around 15.
Which normally signals calm, yeah.
Normally, yes,
Yeah.
supportive for stocks. But here's the kicker. Our overall system dynamic, it's actually mixed.
Yeah.
Only 2 out of 4 core signals are bullish.
Ah, so that's the contradiction right there. Low VIX,
Yeah.
but the underlying system isn't fully convinced.
Exactly. That's the fragility in action. And sentiment backs this up. The CNN fear and greed, the crypto one too, they're both just neutral, bang in the middle.
Okay.
Yet you look at the AAII survey, that's the individual investors, and they're leaning bearish. Over 43% are cautious.
So a real split opinion out there.
A real split underscores that fragile feeling. And one more thing to set the stage. Cross-asset convergence. We're seeing SPY, the S&P 500 ETF, and Tesla often moving together, strong correlation. But Bitcoin, BTC, often doing its own thing. Divergent. That'll be interesting when we break them down.
Okay, complex backdrop indeed. So let's zoom in on SPY then, our market anchor. You mentioned it's coiled and critical. What does that actually mean for its direction today?
It's definitely critical. SPY has this weak, bullish with fragility bias, technical picture. It's coiling up tight right under a big resistance level at $650.
Right, $650 is the ceiling for now.
It seems to be. And all its moving averages, the short-term, medium-term ones, they're bunched up right around $648.50. It's like a pressure cooker situation. What we call a Bollinger squeeze price is tightening, suggesting, pressure's building for a move.
Okay, could break either way then.
Well, here's the fragile part again. Despite seeing long-term institutional buying, yesterday, September 8th, there was heavy block selling. Big chunks of shares hitting the market led to a net institutional outflow of $1.48 billion. That's significant. It injects instability right when things look coiled for a potential pop.
Okay, hold on. So the big institutions are buying for the long haul, but then suddenly dumping shares yesterday. That feels contradictory. What's going on there?
It's a bit of a head-scratcher, isn't it?
Yeah.
It suggests maybe they're being tactical, hedging bets perhaps, taking some profits because they aren't totally sure about this rally's legs.
Okay, makes sense in a fragile market.
Yeah.
What about the options market for SPY?
Yeah, that's fascinating too. It's acting like a pinned magnet.
Yeah.
Lots of call options bought at the $650 strike, so people are betting on it going above that.
Okay, bullish sign.
To a degree. But there's a really heavy put skew. The put-call ratio based on open interest is 2.51. That means way more open puts bets on a price fall than calls.
Wow, 2.5 to 1, so lots of downside protection being bought. Hedging.
Exactly. Long-term hedging or outright bearish bets are definitely still in play, despite that interest at $650.
Now, you mentioned something really interesting earlier, dealer positioning and gamma mechanics. Sounds complex, but you said it could really amplify moves. Break that down for us.
Right, this is super important for you to grasp today. Options dealers, the market makers, they find themselves short gamma in this $648 to $652 range.
Short gamma, meaning?
Okay, think of it like this. As SPY's price moves up through this zone, these dealers, because of the options they've sold, are forced to buy SPY shares themselves to manage their own risk, to stay neutral.
Ah, so their hedging activity forces them to buy as the price rises.
Exactly. It creates these forced buy triggers. We see them specifically at $648, $652, and $655. If SPY pushes through these levels, the dealers have to buy, which adds more buying pressure, potentially accelerating the move up, like adding fuel to the fire.
Rocket fuel,
Yeah,
potentially?
yeah,
Okay.
could be. So the primary strategy here, we'd look at long calls, betting on that upside, but only if we see a sustained break above $650. Target maybe $652 to $654.
And DOTUS has a specific trigger.
Yeah, DOTUS flags buying the 652 call specifically if SPY holds above $648 and we see decent pre-market volume, like over 5 million shares. Volume confirmation is key.
But there's always a but, right? What's the downside risk?
Always. The critical contingency is if SPY tries for $650 but gets rejected and then drops below $647.20, the picture flips. Then a put strategy betting on a fall towards the 644 zone makes more sense.
And if it breaks below $640?
If it goes below $640, that invalidates the bullish structure. Game over for the immediate upside scenario.
So it really is a tightrope walk around that $650 level. And the dealers could push it higher if it breaks convincingly. Fascinating stuff for SPY.
Absolutely. Precision and watching those levels are paramount today.
Okay, let's shift gears. If SPY is the anchor, Tesla, TSLA is often, well, the more volatile amplifier, right? But you're calling it the fragile amplifier today. Why so fragile, and how might it amplify things?
Yeah, TSLA's bias is neutral with the downside lean. So right away that tells you it's not exactly brimming with confidence. Technically, like SPY, it's also coiled in a Bollinger Squeeze, but its momentum is just flat.
Neutral.
Dead neutral.
Yeah.
The RSI indicator, right at 49.17, basically the 50-yard line. MACD, another momentum gauge, flat as a pancake. There's just no strong directional push from the indicators.
And the institutional money following SPY's lead.
Actually, it's more decisive here, but not in a good way for bulls. Institutional flows flipped to net selling yesterday, a net outflow of almost $69 billion.
Okay, nearly $1 billion out. That definitely undermines the prior bullish momentum, as you put it.
It does. It suggests the big players are actively reducing exposure here, taking chips off the table. And looking at short interest people betting against the stock, it's pretty stable. Around 76.7 million shares shorted. It will only take about a day for them to cover.
Meaning no imminent short squeeze?
Yeah, no squeeze fuel near term. Don't expect a sudden, massive rally driven by shorts getting forced out.
What about TSLA options? You said SPYs were interesting.
TSLA's options are coiled, cheap, and range-bound. But they look modestly overpriced relative to actual TSLA movement.
How can they be cheap and overpriced?
Good question. The implied volatility is low historically, making the options low cheap. But the stock's actual recent movement, its historical volatility, is incredibly low, just 35.7%, down in the second percentile of its history. So the stock itself isn't moving much, which makes the options premium you pay seem a bit expensive for the limited action you've been getting.
Got it. So options are priced for more movement than TSLA is actually delivering lately.
Exactly. And the near-term probability charts, they point to a chop zone between $345 and $360 for the week, likely stuck in that range.
So strategies. What are the triggers for TSLA?
For a bullish play, you'd really need confirmation. We'd only consider calls on a decisive break above $355 or maybe $362, and critically, with volume confirmation. Need to see buyers stepping in strongly.
DOTUS trigger.
DOTA suggests looking at the 350 call, but only if TSLA gets above $348 and volume picks up significantly, like over 8 million shares traded early on.
And the downside.
The downside trigger is a break below $338. If that happens, it could trigger an accelerated downside move toward the $335, $330 zone.
Yeah.
That would signal a clear bearish reversal.
Okay, so TSLA is really waiting for a push. It's neutral, maybe leaning slightly weak, and could definitely amplify a move once it picks a direction, especially if volume comes in. A bit of a wild card.
Absolutely a wild card. It lacks its own strong internal conviction right now, making it very reactive to the broader market or specific news.
Right, makes sense. Okay, finally, let's turn to Bitcoin, the ETF specifically. You've called it the gatekeeper today. What's its role and why is it important in this whole fragile setup?
Bitcoin's short-term bias is actually neutral bearish, so a bit cautious there. And again, we see conflicting signals, which seems to be the theme today, doesn't it?
It really does, everywhere.
Yeah. So short-term technicals for BTC, they lean bearish. You got things like the 21-day moving average crossing below the 50-day, often a sell signal. And we're seeing some slight net outflows, mainly from smaller traders selling.
Okay, so short-term looks a bit weak, but
But institutional sentiment is mixed to long-term positive accumulation. The bigger players are still buying the dips, seeing longer-term value, even if that short-term picture is murky.
so same pattern as SPY, almost short-term caution, long-term accumulation.
Similar dynamic, yes. But here's where Bitcoin gets really interesting today. Its options market. It's showing a bullish skew, meaning calls are more in demand than puts further out, and its implied volatility, the 4E, is extremely cheap,
Extremely cheap. How cheap?
down at 37.82%. That's in the first percentile historically. Basically, options have almost never been cheaper relative to expectations.
Okay, extremely cheap IV. Explain that convexity play idea again for the listener. Why is that such a big deal?
Right, so convexity here means because the options are so incredibly cheap, buying them calls or puts gives you massive leverage to a big price swing.
Ah, okay.
Even if you're unsure about the direction short term, the cost of betting on a large move is historically low. So if BTC does make a significant jump up or down, the payout on those cheap options could be huge relative to the small premium paid. It's a way to position for volatility itself.
Got it. High potential reward for relatively low cost because volatility is priced so low right now.
Exactly. Makes long options exposure very attractive. Now, given the neutral bearish short-term bias, our primary strategy leans defensive. A defensive put hedge makes sense if Bitcoin spot price breaks below $110,000. That corresponds to the ETF dropping below $47.50.
And dodos.
DOTAS actually flags buying the 47 turns. Put in a spot goes under $55,000, seeing that as a key level, signaling a broader risk-off shift across markets.
In the bullish case for Bitcoin.
The bullish trigger would be a breakout above $113,500 for spot BTC or $50.50 for the ETF. If we see that, then bullish call strategies come back into play to capture that cheap convexity on the upside.
So Bitcoin's in a funny spot. Leaning slightly bearish short term, but with these incredibly cheap options, making it a potential powder keg for a big move, and maybe a hedge or even a leader for the broader market.
Precisely. It's playing multiple roles,
Yeah.
potential hedge, source of cheap convexity, and maybe even, as we'll see, a leading indicator. Very versatile in this environment.
Okay, we've dissected SPY, TSLA, and BTC. A lot of detail there. How do we pull this all together? What's the integrated playbook for someone trying to navigate this fragile, bullish minefield today?
All right, let's zoom out. The overall approach boils down to this. Try to capture SPY and TSLA upside convexity, meaning benefit from sharp upward moves, but only on confirmed breakouts. At the same time, you need to be actively hedging with BTC puts, using that cheap volatility for protection.
Okay, selective offense, active defense. How does that translate into a portfolio?
Our KSC portfolio strategy system suggests a specific allocation right now. 40% to SPY, that's your stable core. Then 35% to the BTC ETF, looking for that leading growth potential we talked about, and 25% to TSLA for its high upside potential if it breaks out.
So SPY for stability, BTC for growth leadership, TSLA is the high beta kicker.
That's the rationale. But underpinning all of this, especially in a market this fragile, is strict risk management. It's non-negotiable.
Okay, lay it out for us. What does strict look like here?
We're talking position sizing. Limit your total options exposures, maybe 25% of your portfolio value. Individual trade risk. Keep it tight, like 2% per trade, maybe 5% max if you have a smaller portfolio. And those super risky 0DTE options, the ones expiring today, cap exposure at just 1% of the portfolio. Very easy to get burned there.
1% max on 0 DTE. Got it. What about stop losses?
Crucial. For options, have an automatic exit rule say, if the option loses 50% of its premium value, you're out. Protects capital. For the portfolio overall, maybe a daily loss limit of 1.5%, triggers an exit on specific positions.
And broader alerts, like if the whole market turns sour quickly.
Yeah, portfolio risk triggers. Get alerts if your daily P&L hits -5% or if your total drawdown reaches -8%. These are signals to step back, reassess, maybe cut risk across the board. And the VIX, remember the fear gauge? If it spikes above 18, that's kind of a kill switch. Time for full hedging.
Full hedging. Maybe even buying VIX calls.
Yeah, if the VIX gets above 17.5, looking at something like UVXY calls, which profit from volatility spikes, could be a smart move. One more thing. Watch out for momentum divergence. If price is going up, but momentum indicators are lagging or falling, that's a high risk of false breakouts. Keep any quick scalp trades really tight.
Okay, very disciplined. And timing. Are there specific windows to focus on?
Yes, we structure the day. Pre-market, 4:00 a.m. to 9:30 a.m. Eastern, is for monitoring those key levels we discussed. The open session, 9:30 a.m. to 11:30 a.m., that's often the best window for entries, especially if you get those volume signals by, say, 10:00 a.m., like SPY, RSI breaching 60, or TSLA volume hitting 8 million shares.
So act on confirmation early?
Generally, yes. Then there's a momentum window, roughly 10:00 p.m. to reassess. Did the move follow through? Do you scale in more, take profits, or cut a losing trade? It's about active management through the morning session.
This is incredibly detailed, a real framework. Now, I know you mentioned some novel insights tying these assets together in maybe unexpected ways. What's the deeper connection here?
Yeah, this is where it gets really interesting, beyond the individual setups. The main novel insight we're seeing is that Bitcoin ETF inflows and its incredibly low volatility seem to be potentially leading TSLA and SPY.
Leading. You mean Bitcoin's action is predicting moves in stocks?
Potentially, yes.
Yeah.
Especially considering the recent TSLA pay package news acting as a catalyst. It's like the crypto market behavior is offering a sneak peek into traditional equity sentiment.
Wow. Okay, what's the implication if that's true?
The implication is pretty significant. Our models suggest that if BTC holds above the $49 level on the ETF, it could signal a quantifiable upside, maybe 5 to 7% in the broader market, like SPY over the next 30 days.
5 to 7% upside signaled by Bitcoin.
Yeah, and that could translate to roughly a 9% potential portfolio return based on that CAN-C allocation we discussed. It positions BTC, despite its current neutral bearish short-term look, as a potential rotation leader. Money might be flowing into BTC first, before rotating into traditional risk assets.
So the crypto market, which many see as separate, might actually be the canary in the coal mine for stocks like SPY and TSLA right now. That connection is a genuine aha moment.
It's a powerful observation in this specific context. And there's another novel tactic to consider for risk management, using options collars on SPY and TSLA.
Collars, how do they work?
It's a strategy where you buy a put option below the current price that protects you from a big drop. But to pay for that put, you simultaneously sell a call option above the current price.
Okay, so you limit your downside with the put, but you also limit your upside potential because you sold the call.
Exactly. It creates a collar around the price. You cap your potential losses, but you also cap your potential gains. In a fragile market like this, it offers a more controlled risk profile. You give up some big upside potential for defined downside protection.
A smart way to stay invested but sleep a bit better at night, maybe, particularly in this fragile state.
Precisely. It's about tailoring your strategy to the environment.
Well, this has been quite the journey. We've really dissected a complex, fragile, bullish market today. It's clear that precision, that strategic hedging, using things like BTC or collars and getting the timing right are absolutely critical.
They really are. And hopefully what you, our listener, take away is that understanding this intricate dance between the technical charts, the institutional flows, the weirdness in the options market, and how these different assets influence each other, even when the signals clash, that understanding gives you a real edge. It's about seeing the whole chessboard.
Absolutely. Thank you so much for guiding us through that complexity today. And thank you, our listener, for joining us on this deep dive.
Yeah, thanks for tuning in. And maybe just a final thought to leave you with. In this age of endless information, just knowing the signals isn't enough, right? The real power comes from understanding why they matter, how they connect, sometimes in surprising ways. So how might today's dive into market fragility and this idea of unexpected leadership from somewhere like Bitcoin, how might that change how you look at the markets tomorrow?